Welcome back to Elements in Focus. Tis the season for year-end tax planning, and welcome to part three of our year-end tax planning series, Advanced Year-End Tax Strategies for Gifting and Estates. In our last discussion, Aaron did another phenomenal job of walking us through what to pay attention to with using retirement plans and other effective strategies of using capital gains tax, etc. Pardon the frog in my throat here. And today, Aaron's going to walk us through again some advanced strategies to look at through when it comes to gifting and maybe some considerations when it comes to your estate plan as well. And so, looking forward to this discussion. Just to highlight one more time, for every discussion we've had here with everyone, there is supplementary um, articles and literature out there that will dive deeper into the points Aaron will make today. Just wanted to lay it out there as if someone's going, oh goodness, what was that point Aaron made? Please feel free to go back to that material and look through that. But again, without further ado, our amazing, wonderful Director of Financial Planning, Aaron Rheaume.
Thank you, Grant. You set that up so well. As mentioned, this is the last part in our tax planning season, and we're probably getting right close to the holidays. So one of the topics we're going to discuss today is gifting. And, around the holiday time, a lot of folks like to take care of their kids or grandkids, and they want to know what type of gifting strategies can we do. Well, currently in 2024, you can gift up to $18,000 per individual, $36,000 as a couple to anybody that you want. It has to be a no strings attached gift, but doing so does not allow any sort of tax form needing to be filed. So that could be out of cash, it could be out of a savings account. As long as you're gifting that $18,000, there's no strings attached. You can gift and not have to have the individual recipient pay tax. That's coming from an asset like a stock or something like that. Then we have to pay attention to capital gains, and we get into some different rules. One other thing that a lot of folks like to do is contribute to their grandkids or their kids' 529 plans. Here in the state of Indiana, you can get up to a 20% tax credit on $7,500 contribution. So you can get up to a $1,500 tax credit. That does not, it goes against taxes owed. So if you only owed $1,000 of tax to the state of Indiana, they're not going to give you a refund of $500. It would just offset that tax by $1,000. Some other gifting strategies as we're getting towards the end of the year. If you're over 70 and a half, a day over 70 and a half, you can do what's called a qualified charitable distribution or qualified charitable donation. And that's taking money out of your IRA account and giving it to a non-for-profit. That also has a little bit of caveats. It has to go to the designated fund. You can't designate what it's for, but if you're charitably inclined and you're over 70 and a half and you have money in a tax-deferred IRA, you should be looking at giving out of that account because you don't recognize it as income on your tax return. The other thing, if you're getting towards the end of the year and you have stocks that have done very well and you want to gift, you can gift to not-for-profits, 501c3s, nonprofits, appreciated assets. What happens is you transfer that stock to the charity sells the stock on your behalf, and because they're a nonprofit, those donations are tax-free. So there's strategies that we really want to pay attention to prior to year end. And the last thing that I will leave you with is pay attention to your estate plan. Currently, we have a gift tax or an estate tax exclusion of over $27 million. That number might come down in the next couple years as the Tax Cuts and Jobs Act is expected to sunset at the end of 2025. So if you have a large estate, we want to pay attention to some estate tax that could be coming your way. And what better way to do that than having a conversation with FEG Trust Services. So here at FEG, we have a trust services department that helps our families with trust type conversations. So if that could benefit you, please reach out to us. As Grant mentioned, this will be in an article as well. So if you want to dive deeper into these conversations, please read the article that is attached or associated with this video. Grant, as always, I'm going to turn it back to you to wrap up.
Absolutely. And Aaron, thank you for expelling the energy and having the wisdom to walk us through this three-part series. You did a phenomenal job. We're all definitely wiser for it. For those of you that are thinking through year-end tax planning and recognizing that there's not a whole lot of runway left in the year to do so, if you're wanting to have a conversation about your year-end tax planning, or maybe you're looking to start preparing for what next year brings, please do us a massive favor and give us a jingle at 800-928-4001. We would love to have a next steps meeting with you that's fully complimentary. We want to provide value to your situation. We're not right fit for everyone, but hopefully you walk away with something you consider to do in your situation today, something you can think about for your future. And if we do indeed partner together, there'll be a written plan. Thank you for the time today. We hope that this three-part series was beneficial, and we hope that today was meaningful for what you're looking to accomplish at year end. Thank you for your time as always. Have a great holiday. We hope you have a spectacular new year. Take care.